Good afternoon, guys. We are the last reporter, Group 4, and we will be discussing about unit investment trust funds. Anyways, I am the first reporter, Lea Salcedo, and I will tackle what unit investment trust is and how it works. So first, let us define unit investment trust fund, or also known as UITFs. Are pool of investments in various financial instruments such as money market securities, bonds, and equities. So, bale, i-discuss na ng mga next reporters. So, dito daw is they do not earn through a fixed interest rate but grow in value depending on the assets it carries and the market. Kaya risk ito kasi pwedeng bumaba or tumaas or alam natin na mag-fluctuate ang value as the market moves. So, next is how does it works? Kagaya ng sinabi ko kanina, yung mga investor dito is may similar investment objectives where they pool their money or funds, and these funds are managed by the professional fund manager. So, since may nag-manage na ng mga funds, you can sit back, relax, and make your money work for you. That's all from my report. Thank you.
Hi, I'm Janeline G. Salvado from CBET-22-501P. We have different types of UITFs in the Philippines, and my report is all about the first type of UITFs, which is money market funds. Money market UITFs have special deposit accounts and time deposits that mature at a specific date, usually within 1 year or less. The yield you'll get from money market UITFs is higher than what you'll get from the interest in your savings account. The objective of money market funds are capital preservation and income generation from low-risk investments, because these funds are usually invested in a fixed income securities, meaning these funds have low volatility compared to other investments. This type of unit investment trust fund is suitable for conservative or risk-averse investors who are looking for safe and liquid investments with yields that are relatively modest due to lower risk exposures. So do not expect high yield in this fund like in stocks, because it is low risk that equate to low return. And even though UITFs, including money market funds, are not insured by the Philippine Deposit Insurance Corporation or PDIC, money market trust funds are considered much safer than other types of UITFs in the market.
Good afternoon, everyone. My name is Nicole Sapiera from CBET-22-501P. The topic I will be discussed is about bonds. What is bonds? Bonds are considered as IOUs, means I own you. This is because bonds are debt instruments wherein an investor, you, lends a money to a borrower. It's either company or government. There are two general types of bonds. First, the bond issued by the government, which is called treasury bonds, and those issued by corporation called corporate bonds. Government and corporate bonds are much safer than stocks. Then why should you invest in bonds? First, minimal risk. Bonds hold minimal and almost zero risk because bond issuers are obligated by law to pay the principal and the interest on the bonds back. For treasury bonds, the government can always print more money or increase taxes to pay back. As for corporate bonds, corporations are required by law to pay the bonds first before they back the dividends by stockholders. Second, why you should invest in bonds? It is higher return than saving accounts. Most saving accounts pay you interest at the rate of 25% per annum. For those offering interest at 1% or more, you would need to have at least 1 million pesos in the bank. Bonds offering higher returns than saving accounts. The interest rates are higher than what you get from saving accounts, which is a good investment if you're a conservative investor. Third, why you should invest in bonds. It is a regular payments. Payments on your bonds is made usually on a semi-annual basis. The percentage of the debt paid to you is a yearly basis known as the coupon rate. If your bond was issued at 100,000 and the coupon rate was 10%, then you would be paid 10,000 yearly or 5,000 semi-annually. Receiving regular payments on your bond with interest is a good way to stock up your net worth. Fourth, why you should invest in bonds. It is introduction to riskier investment. Once you get used to seeing your money grow with your bonds, you're more confident in the legitimacy of paper assets, such as bonds and stocks, where pieces of the paper define ownership, as opposed to physical assets such as real estate. Now that you have the first-hand experience of growing your money through investments, it should give you the courage to invest in riskier instruments. If you're hesitant to go into stock, investing with all your risk, you can buy corporate bonds, which come with a little more riskier than saving accounts, but not as much as stocks. Buying corporate bonds allows you to be riskier and experience higher returns without the exposure involved in stocks. Last, why you should invest in bonds. It is a diverse investment portfolio. When it comes to investing, you always hear the quote, "Don't put all your eggs in one basket." Means, bonds allow you to diversify your investment portfolio. Bonds present a great way of spreading the risk in investing. They are relatively safer than stocks and provide higher returns than money market instruments. The return on bonds are lower than the yields on stocks, but they are safer and minimize your risk. Now you know what is bonds and why we should invest in bonds. Are you ready to invest in bonds? Again, my name is Monica Sapera and thank you for listening.
Good day everyone, my name is Maya Paula B. Silvestre from CBET-22-501P and my topic is about balance funds. So ano nga bang ibig sabihin ng balance fund? It is a type of hybrid fund which is an investment fund characterized by its diversification among two or more classes. So nagko-contain siya ng stock component, fund component, and sometimes money market component in a single portfolio. But generally, nagko-combine lang to ng both conservative securities gaya ng bonds and the riskier ones such as stocks. Ang typical balance funds ay may pina-follow na 60% stock and 40% bond asset allocation. So, ano nga ba ang nagagawa nito sa balance funds? It allows the investors to create an investment strategy that is relatively low risk and high reward. So, nagpo-provide na siya ng ready portfolio ng dalawang main asset classes which is yung equity and debt. Also, the work of asset allocation is taken care by a fund manager. So that's why balance funds is also known as asset allocation fund as it involves maintaining equity debt ratio at a desired level. Next is balance funds invest with the goal of both income and capital appreciation. So typically, retirees and investors with low risk tolerance utilize balance funds because they are seeking for health growth and income that supplements their current needs. So, for those investors na naghahanap ng mixture of security, income, and capital appreciation, balanced fund is a good investment to choose. This type of unit investment trust is suitable for them because it is great for those who are willing to take on more risk by investing in stocks, but at the same time want to minimize risk by including more conservative securities such as bonds. Balanced funds provide investors with diversification. By diversifying the investment across different asset classes, nami-minimize ng investors yung risk na makakaharap nila rather than if they were to invest in a 100% stock fund or 100% bond fund. The advantages of balanced fund is that it is low expense ratios. Because balanced funds really have to change their mix of stocks and bonds, they tend to have lower total expense ratios. Next is low risk. Because they automatically spread an investor's money across a variety of types of stocks, nami-minimize nila yung risk of selecting wrong stocks or sectors. The disadvantages of balanced fund. It is a preset asset allocation. Like what I've said earlier, nagpo-provide na siya ng ready portfolio ng two main asset classes. So, ina-obviate na yung mga investors na bumili ng mga separate equity and debt funds. Next is safe and stodgy returns. Though safe ang balanced funds, ang balik naman sa'yo ng mga funds mo is mababa lang. So, is balanced funds a good investment? Experts say this fund is ideal for the first-time equity investors as they invest in stocks while keeping the risk low. So, in conclusion, balanced funds are ideal for investors who want a combination of low risk and high risk return profile.
Good day everyone, I'm Sweet Rose Sobarjaga and I will discuss about stocks or equities. It is one of the types of UITFs in the Philippines, regulated by BSP and managed and handled by professional fund managers. Equity UITFs are 100% stocks. It is managed by professional fund managers. Equity UITFs already have a pool of stocks including some of the country's largest corporations, including Ayala Land, SM Prime Holdings, Philippines Long Distance Telephone Corporation. The difference between individual stocks and equity UITFs that it is individual stocks come with a lot of advantage. You have a direct control over what you buy. Unlike the equity UITFs that is pooled fund that is automatically diversified. We know that stocks are shares of ownership of a company listed in the PSA, which is Philippine Stock Exchange. And this is the top 5 best UITF equity funds in the Philippines that offer equity funds. BPI, BDO, BBDO. This type of UITFs is aggressive. It is suitable for aggressive investors who are willing to take risks to experience much larger yields, yet you do not have time and knowledge to invest in individual stocks. Because UITFs is handled and managed by professional fund managers, you have a diversified portfolio that they are managed. And that's all. Thank you. Thank you for listening.
Good afternoon. I'm Maria Rochelle Tadoy, and I'm going to report how do I earn from UITF, Unit Investment Trust Fund. If you want to make a profit through UITF, you can invest in stocks and bonds. So your fund manager will handle and will do most of the legwork on behalf of you and other investors. So these funds earn through these three different terms. First, stock price increase. Your fund will earn money when the company shares you invested increase price. So how does stock price increase? It will only happen if there are a lot of investors are attracted to invest in a company. So yung mga investor kapag nakikita nila na maganda yung plano at kinaharap ng isang kumpanya, kung may mararating ba yung pera na i-invest nila sa kumpanya, then malamang ma-attract sila na mag-invest dun sa isang kumpanya. And if there are a lot of investment, the stock price will increase. And if the stock price increase, then the more money you will also earn. So next is dividends. Dividends comes in several forms, but the most common is cash, which is deposited into shareholders' investment accounts. So how do you earn through dividends? For example, if a company declares a $0.30 dividends and you own 100 shares, then you will receive a $30 in your investment account. Or pwede rin na yung kinita mong dividends is i-invest mo ulit dun sa company. Kasi the more shares you own, then the more profit you will earn through dividends. So take note that the company often pays dividends quarterly, but some pays semi-annually or annually. Next is bonds. So if your unit investment trust fund is invested in bonds, you will earn a profit when the borrower pays the interest. Bonds are issued as a proof of indebtedness by both private companies and the government.
Good afternoon, everyone. I am Rika Tibon from CBET-22-501P, and I will be discussing about the advantages of investing in UITF or Unit Investment Trust Fund. Number 1. Diverse and invested in various industries and companies. Ang Unit Investment Trust Fund ay nag-o-offer ng wide variety of funds na pwede mong pagpilian that is invested in different industries and companies. Number 2. Easy way to earn passive income. Kagaya ng sa mutual fund, ang Unit Investment Trust Fund ay merong fund manager na nag-o-overseas ng day-to-day trading, allowing investors na mas makapag-earn pa ng passive income. Number 3. There is a professional fund manager who will do the legwork for you, meaning the work that involves much traveling to collect information, especially when such work is difficult, can be done by a professional fund manager. Number 4. Easy access. It can be accessed easily because you can open an account in any branch of the bank near your place. That's all. Thank you.
Hi, good afternoon. I'm Francis Martin Trapane. I'm your reporter for the concern risk involving Unit Investment Trust Fund. First is that your return on investment varies. So sa lahat naman ng klaseng investment, there's no such thing na assurance na babalik agad yung pera mo or malaki yung kikitain mo. Second is that UITF is not guaranteed or insured by the Philippine Deposit Insurance Corporation. Unlike sa mga bank deposits, savings account, time deposit, they are insured by the Philippine Deposit Insurance Corporation. Third is that you cannot control where you would like to invest in your money. The fund manager decides which assets to buy. So in UITF, there is a fund manager na nagde-decide kung saan nila ilalagay yung pera mo at kung ano yung assets na bibili nila para kumita yung in-invest mo. Fourth is the interest rate risk. So meron akong list dito ng mga fees or babayaran mo once you enter the UITF. First is trust fees. 1 to 1.5% of the NAVPO, which is NAVPO is the price for each UITF participation unit. This is the fees na binabayaran mo sa fund manager. Second is the early redemption fees. So bawat bangko there is a bank policies na holding period nila. So let's say yung bank na pinag-investan mo is 90 days holding period nila. Once you redeem it ng mas maagap sa 90 days, meron kang babayaran na fee. Third is the custodianship fees, which is around 0.002%. This is the fee na binabayaran mo given to the bank that holds securities. Fourth is the sales charge, which is 0 to 2% of the NAV. Ito yung binibigay din sa fund manager that actively managing the UITF, your UITF portfolio. Bukod pa to dun sa trust fees na binabayaran mo. Last is the withholding tax, which is the 20% withholding tax on the capital gains. Once you invest in the UITF, your capital has no interest. Pero once na nag-gain na yung capital mo, once na kumita na ito, doon lang siya magkakaroon ng 20% na interest rate pag niredeem mo na yung pera mo. So next is the market price risk. Dito naman is pag bumaba ang bentahan sa market, bababa din yung gain doon sa ininvest mo. Last is the foreign exchange risk. So this is the risk na pag nag-invest ka sa ibang countries na corporation, tapos bumaba yung dolyar, bababa din yung kikitain mo doon sa ininvest mo. That's all. Thank you.
Hi, I'm Marjon Altroyo, and this is my report. Is UITFs good investment? Well, it actually depends. There are no perfect investment for everyone, but there are great investments that are suited for your specific goals. So it really depends on your specific needs and goals if you should get a UITFs and what kind of fund you should get. There are many different kinds of UITFs. There are funds that invest in stocks. There are funds that invest in real estate. There are funds that invest in bonds and other short-term time deposit. And it's a mix of different assets. Now, is UITFs good investments? Our answer is yes, especially for beginners, because it's the fund manager that makes the investment decision for you. All you have to do is buy the fund, wait and be patient. Again, wait and be patient for the NAVPs to go up. And then, when you're happy with the profits, then sell. Exit. That's it.
Hi, I am RJ Ray Volante from Group 4 reporting Unit Investment Trust Fund. After knowing what Unit Investment Trust Fund is, it is time for investing. But the question is, how to invest in Unit Investment Trust Fund? First, you need to choose and visit the entity you have chosen. Dapat sa pagpili ng bank, it must be a reputable company with established history, may reasonable fees, at syempre may good customer service din. Malaking impact ito sa pagpili ng company or bank dahil ipagkakatiwala mo sa kanila ang iyong pera. Here in the Philippines, these are the leading banks offering UITF: BPI, BDO, Security Bank, Land Bank, PNB, Metro Bank, Union Bank. Number 2, tell the representative of the bank you would like to invest in. Next, accomplish the client's suitability assessment test. This test is being conducted to help the marketing personnel or account officer to determine the client's understanding of the risk related to investing. The marketing personnel or account officer must 1. Make a reasonable inquiry into the client's financial situation, investment experience, and investment objectives prior to making any investment recommendations and shall update this information as necessary. 2. Consider the appropriateness and suitability of investment recommendation or actions of the client. And lastly, make a recommendation only if he reasonably believes that the recommendation is suitable to the client's financial situation, investment experience, and investment objectives. Number 4, fill out the application form and wait for your application to be processed. And lastly, Number 5, monitor and talk to your fund manager about your investment in UITF.